everyone. Welcome to our F2 class. Can everyone hear me? Hello, can you guys hear me? Hello, everyone. How are you guys? Welcome to F2. Can you people hear me? Can you guys hear me? Is my voice clear? All right, that's great. Welcome to our F2 class. I'm Mubarak Ali and I will be your teacher for F2. So welcome aboard. How are you guys? I hope you all are well and enjoying your time. All right, I got a bit late because it's the first time, so I had a few, problems with the login ID. I got the password wrong, so I had a few issues. So apologies for that. I hope for next time it's not going to be the same case. All right, so I would like you people to discuss things with me, right? And this chat box that is in front of you in the software is the means that you are going to be putting your questions or anything that I ask from you people. So most of you, it's the first time you're taking it. Is anybody here who is taking F2 for the second time, or most of you is for the first? Can you please tell me? Because I just want to evaluate how we're gonna go about this. All right. Can you please everybody, one by one, please? You have to be interactive with me because, all right, that's great. Hello, Rostam, how are you? All right, so I assume that most of you, it's going to be the first time. All right, that's exactly. I just want to see if anybody, two or three people, I just want to identify and evaluate. All right, so Nela, it's your second time, right? Okay. I'm sorry if I pronounce the names wrong, okay? Because sometimes it's, when it's international classes, names can be quite a challenge. So apologies for that again. Okay, all right. Okay, so first thing, right? This subject is the basics, or you say the foundations on which you're gonna build your later future papers. Okay, so in terms of that foundation, this is really important and really critical. All right, it's the same like you're going for a motorbike journey, for like a world tour or something, and you start preparing for it like not weeks, months before it, right? And you start collecting things and you're selecting your right motorbike and the first aid kits, and you're not even starting the journey, but you are concerned about collecting your toolbox. Okay, so this is that preparation phase. In my expert opinion, your ACCA journey starts with like when you reach to your paper F5, when you start dealing with case study scenarios, right? This is the preparation phase for that journey, because in my opinion your journey starts there, because that's what you start dealing with business cases and how to deal with situations. Here you're not learning to deal with situations. Here we are going to learn techniques. We're going to collect techniques. We're going to learn techniques. We're going to know what is what and how we're going to apply it. What is the concept? What is the model? What is the purpose of it? So our question most of all will be what, right? How this works. What is this thing? How it's a concept. What is this? How it works? What is this? How it's work? Calculate, interpret, calculate, interpret. So we are going to be moving around that. Now, for that purpose, this class has more lecture hours compared to even the higher subject. Like P series teachers have probably 22 lectures. We have 25 lectures. And the reason behind that is because we have to learn everything. So we are going to be a bit slow in our pace. We're not going to rush things, and we are going to learn as much as we can. So this is the learning and knowledge phase. And you have to devote a lot of time, right? This is for sure. You have to devote a lot of time. You have to dedicate a lot of time to this. In my opinion, students normally do two things, right, which they should not. And they do two things which are really, big problems with students, which they try to do it, which they definitely should not. Number one, they try to rush this subject. They try to get rid of it as soon as possible. I'm involved with in teaching career from the last, I think, 14, 15 years. Students come to me, sir, can you teach F5? Yes. F2? Yes, I can. Can you teach us in 2 months? And I said, like, 2 months, you just want to read it, or you just really want to learn it, because it's around 25 chapters, around 24, 25 chapters. So it's like, even if we do like, one chapter, 2 days with practice, everything, it's probably not be possible. 2 months is not enough. So I'm not talking about that we are going to take 6 months, right? But the first thing is that you have to give time to it. Settle down, collect all the tools that you need for your, not only the exam, but for the future. Okay? Second biggest problem, which is, I think, the biggest problems of all. I have seen it over the years in my career. And that is that students come and ask me, sir, what are the key areas? And there are some key areas, which I'm not going to tell you right now, because I don't want you to fall into that trap. So they focus on those key areas. They will only study that. They go to the revision kit. They just try to learn around it, the revision kit, and those particular topics. Go to the exam, pass the exam, get 55, 60 marks. That's it. They are happy. One student even told me that, sir, you told me not to do that, and see, I have passed. I say, okay, that's good. Congratulations. And later on, I think he attempted F5 for some 3 times. And as a teacher, I didn't then want to tell him that, see, that's what I was talking about. So the second thing, we're not only preparing we are definitely preparing for the exam, but we are not only preparing for the exam, we're learning, right? So the learning has to be the spirit, collecting all the tools, techniques, that has to be the spirit, all right? So first thing first, make up your mind, settle down, and we have to give it time, all right? Okay. So we hope that we have a good journey, and we hope that in future we will be together in our F5 subject as well. And how we are going to go about it, we're going to discuss it in a while. Okay. All right. Let's introduce our opponent, which is the subject, right? What we are going to face. All right. Management accounting, this subject is really key. I'm going to introduce it in myself in a while. It's just what is the guidance of ACCA mainly. ठीक है. Management accounting is all about how management strategies are built and developed and decisions are made in order to successfully run the business. So management accounting in a nutshell is planning, decision making and control. Now it's not about theoretical management, it's about decision making in practice, like investment decisions, production volume decisions, how much sales we should make, how much production we should make, how much volume we should make, how much should we make a particular, should we go for a particular investment or not, how budgets are prepared. So I'm going to introduce that in a while, right? Okay. This is the syllabus that we are going to be running, right? If you look at the syllabus areas, we have syllabus areas till F. So the first part will be the introduction, nature and purpose of management information, right? Here we're going to introduce what management information or management accounting is and what it includes. Then data analysis and techniques, we're going to learn it delayed, right? And learn it at the end, because this has some really complicated statistical techniques, normal distributions and statistical and mathematical techniques. So that can be slightly challenging. So I would like to delay it for later. All right, this is a major area. If you see this, why is this area so big? Because these are almost 10 chapters. These are cost accounting chapters, what business major costs are, material, labor, how we are going to deal with those costs, how product cost is calculated, what is the value of the product, that is calculated in this part, and we're going to be learning it. After that, we're going to be learning budgeting, standard costing, and performance measurement. These are very key areas, and definitely you're going to be getting questions on it. Okay. In budgeting, we are going to be learning how an organization's future budgets are prepared. What is a budget? A budget is what the organization will do in the next year. Simply how much production they're going to make, how much sales they're going to make, how much profit. So the quantitative plan for the next year. Simple as that. You may have heard a budget for a country when, you know, a finance minister or a person comes in, present a budget that this is what we are going to do for the next. This is exactly what we do for the organization. So we're not just learning the budget, we're going to be involved in budget preparation. We're going to be preparing and calculating the budget for the organization. Standard costing is basically a control process of if once budgets are implemented, then actual results are taken and we compare the actual results with the plan. I'm not explaining management accounting yet, all right? So do not worry that I'm just going on. It's not like that. I'm just explaining what we are going to be learning. So we have cost accounting, then we have budgets, then we have standard costing, which is a control process, and performance measurement is the analysis of business performance through ratios. So these are the major areas. Now, if you see this, it's more about how business performance is managed. That's why it's called management accounting. All right, that's where the word comes from, management accounting, how business performance is managed on how to successfully run the business. Okay, what we're going to be doing in the exam. Okay, this subject has key links with other ACCA subjects. This is an introduction of the subject only. This has links with other ACCA subjects. And what are those links? Here they are. Okay, it's a map, okay? Are you people with me so far? Can you hear my voice? Okay. I want everybody to be linked with me. This is a problem with online class, because if it's a physical class, I'm going to engage the students a lot. So here, you guys are going to help me. Okay. So it's you going to help me. So are you listening to me properly? Are you guys with me?
Yes.
That's great. That's great. All right. So the more you talk to me, the more you respond to me, I'll feel like I'm not just talking to the camera, right? It's this online class is really, I would say apologies for the word weird, right? Because it's just a camera that I'm talking to. So your talk and your chat and your response is going to make me feel that no, there are lots of people that are listening to me. Okay. Now, this is interesting. That this slide is interesting if it's in front of your screen. Okay, it's a map. You may have seen a map in a park or somewhere where it is written, you are here. Okay, this is where you are. Now, these are basic papers that are often there for kids which who are like from 10th grade or like O levels or something, right? They're not ready to go for even for the F2, which is FMA, which is your F2 management accounting. So you are here. Now, this subject is so you're not that much uh, in need of these basic. These are really basic subjects, like learning ABC. So I believe it's not really required as well. Sometimes when students come from background who are really who don't know anything about costing or businesses, so we start from here, which in your case I believe is not needed at all. All right, this is going to lead to the legendary paper of F5. Okay, and this is, believe me, this is one of the most knowledgeable paper in all of the accountancy courses around the world. And believe me, what I'm saying, I'm not backing up one bit from it. I have seen a lot of courses. I have studied even American, Canadian courses, and believe me, I have never seen a subject which is that much knowledgeable and which provides you with that much skills. I'm talking about this. And definitely the basis for it is what? Right? If you, again, as I told you, that your journey starts from here. This is your preparation phase. This is so critical. Okay, this directly leads to your advanced performance management, which is the father of the F5, and it leads to another paper, which is the P series paper. This is also a P series paper, which is SBL. So this paper, this management accounting actually hits three areas. Okay, you see that? This is in the skill series, the F5, and then it leads to the APM, which is the advanced performance management, and then the SBL, which is the strategic business leader. So this subject is going to build your knowledge for three papers. There is one topic, I don't know which I believe ACCA has forgot or something. There is one topic which is called investment appraisal capital budgeting. A very, very crucial topic here in management accounting F2, which we are going to study, in which we are going to appraise investments. Should a company go for an investment or not? And that leads to F9, which is an equivalent paper at stage 2. I don't know, they have not kept it. I believe it goes to the stage 2. I don't believe, actually, I know it. Okay, so that's the it's not a topic which is like just 2 pages or 3 pages in production. No, it has around 30-40 pages chapter, so it has full detail of how investments decisions are taken and how should a company go for a particular investment or not. So it's not that it's just at introductory level. No, it's not. It's in real detail. So and then in F9, which is financial management, that topic is going to be repeated. All right, so this is what we are going to do. This is where you are. Okay. All right. About the exam. Right, we have two sections in the paper, in the exam. It's a CB exam. Section A has 70 marks. We have 35 MCQs. which MCQs questions. Have a choice, click that, right? Click the right option. It's called OTs. ACCA people call it OTs. MCQs, they call it OTs. So we have, and in section A, we have 35 questions, which are OTs, right? And there are some tips for answering that. And section B is 30 marks. These are basically 3 MTQs worth 10 marks each. This is a slight introduction towards the case study. So 3 MTQs means multiple task questions. There will be a scenario, and on the scenario there will be 5 questions. So on each scenario, so you will be facing a scenario, right? Will be given information, and then you will be given 5 questions, 1 2 3 4 5, with MCQs. Each of it is a separate MCQ. That's why they're called multiple task question, because in this scenario you're going to be answering 5 MCQs. So that's 5 worth 2 marks each, is basically 10. Not 2 marks. There can be a question which has 0.5 marks as well, but the whole scenario will have 10 marks. So you will have 3 scenarios: scenario 1, scenario 2, scenario 3, and each one will have the 10 marks. You're not going to write anything, right? In this scenario, you're not going to write. Write means comments. So there is no MS Word or anything involved. You're still going to click things, right? Even if it's a 0.5 mark, they will be like, what is this? ABC, click that, right? What is that? ABCD, click that, right? So you're going to only click, or probably write a number in a box. What is the cost? How much is the cost? $50, $60. So you just write that. You don't need to write anything else. The writing portion starts with F5, right? F5 is the paper. We'll start writing constructed or essay-based questions. We call it essay-based questions. Okay. So this is your introduction to the syllabus, how we are going to go about the subject, what is the exam so far. If you guys have any question, please you can share with me. Any question? All right. We're going to be studying the Management Accounting Kaplan book. Okay. The reason why I'm going for the book, notes are there, but notes are not, it doesn't justify the depth of the syllabus. In later papers, almost in all of them, when students have the basic foundation, then we all provide notes. But in I would like to go with the book, and I would like you guys to read the book. Okay, obviously with my lecture, that will give you more in-depth syllabus overview, and you will have more activities to learn from. Okay. All right. So we're going to start with introduction of management accounting and moving on to the syllabus. So should we start? Any question? Can you people hear me? Hello, are we here?
Yes, no question.
Okay, thank you. That was necessary to keep me awake at least. All right, let's start with officially start. This was just an introduction. So again, if you're thinking that I was going a bit faster or not explaining, that was just the introduction of the syllabus. We're going to start officially right now. So first thing first, what is management accounting? What we're studying, what is that? Now, management accounting is a subject which is in which mostly we do three things, right? So whoever asks you what management accounting is, in management accounting, we do two things. The purpose of management accounting is three. Number one, planning, business planning. Decision making and control. All right. Planning involves what? Let's explain all these in a bit more detail. What planning involves? Planning is basically deciding two things: what to do, what to achieve, means setting the objectives of the organization. Objective means targets for the future, and how to achieve them. Means making strategies. So planning is an overall framework of setting business targets and then formulating strategies to achieve them, right? Can you imagine a business manager without planning in today's world, particularly? Imagine the big companies, the Samsung and all of these, the phone companies and Apple and Samsung and the car companies. Can you imagine any of the company without planning their next step? No, not at all. There is no way you can even imagine that a company would be operating without having anything in their brain that this is what we're going to do for the future. So in management accounting, we set the business strategies. We help business setting their what their targets will be for the future. Okay. Even if we wake up on daily basis, like for example, you woke up today and you had in mind you might have alarm set for your class as well, that okay, I'm going to wake up at this time, and you might have thought that to do that even when you were sleeping last time, and setting an alarm and then deciding at night that okay, tomorrow I'm going to wake up at this time, so this is the alarm, I'm going to be fresh, this is what I'm going to do. I did that as well. This is what planning is. So if planning is required even to take one class, right? Planning is required even there, that is planning. Planning is required even to take one class. So definitely business manager needs a lot of planning. They because they have a lot at stake. They have money at stake. They have resources at stake, right? So they have to plan the activities of the organization. So in management accounting, we learn how to plan, how to set future targets, and we do that through budgets, right? A while ago, I was discussing slightly about budgets. Budgets is what we're going to be deciding, in which we're going to be deciding quantitatively what we are going to, how much products we're going to make, how much sales we're going to make, how much profit we are targeting for the next period. Right? If you ask me, sir, what is the target? Targets for sales, target for profits, target for costs. Okay. All right. Decision making in daily life, managers in their daily routine, they have to take a lot of decisions, right? Product has to be closed because it's a loss maker. A new product has to be launched, an investment that has to be made. Should we make the investment or not? Should we allocate this? Management has a skilled labor which is scarce in quantity. Scarce means which is a limiting factor, restricted in quantity. So where should this resource be allocated to product A, B, or C? Should a loss maker product be closed? A component of machinery has to be bought. Should we buy it from this or from the other? This is basically decision making. Decision making involves choice between alternatives. All right. So decision making is choice between alternatives. All right. Sorry, there was some home people having some work. All right. Decision making involves choice between alternatives. So it's a choice, making investment A or investment B. All right. Or should we buy product A or product B, or should we sell product A or product B? All right. So in daily routine, they have to face a lot of decisions, and a management should be taking timely and effective decisions. If they produced a wrong product, if they invested in a wrong place, definitely it will be money lost, it will create losses. So the business managers should be taking timely and effective decisions, right? So the key here is timely and effective decisions. The third one is control. Now, control is the process of keeping check on activities, right? If you want to control something, for example, you want to control our home expenses, what do? We try to identify where the expenses are, how much major expenses, where we are incurring it, at what area we are incurring the expenses. So even if we are going to control our expenses of even ourselves or of our home, we actually try to analyze and see where most of the expenses are going. So it's basically keeping a check on activities, but it has more in management accounting. All right. In management accounting, control is not only just keeping check. What we do in management accounting, or how we look at control, is we make plans, right? First, I introduced control in a normal way, and now I'm going to introduce control to you in a business context. So plans are made, all right, implemented. Now we want to see the plans that we have implemented. Are they going according to what we were expecting from it or not? Right? Means the targets which we have set, those plans would have definitely involved targets, right? So we implemented those plans in order to achieve those targets. Now we want to know, are our plans going according to what we were expecting from them, what targets we were expecting from them, all right? So how we do it? We take actual results and we compare with the plans. Right? So in management accounting, control is basically comparison of actual results with the Give me a minute, please. All right, we're back. I have to turn off the fan. It was making too much loud noise. All right, are we here? Is everybody here?
Yes.
All right, that's good. So in management accounting, control is we implement the plan and we try to know whether these plans are working according to what we were expecting from them. So what we do is we compare the plans with the actual results to see how things are. For example, manager has decided that we are going to sell 1,000 units, okay, in a particular month. We're going to sell 1,000 units. So this is what the plan will be for the next month, say like January. So this is implemented. All the people are gathered. They are told that, okay, guys, we're going to sell 1,000 units of whatever particular product is. At the end of the month, have a meeting to see how much are sold. All right, they actually sold 800 units. Actual sales are 800 units. And then they suddenly found out that we're 200 units short. So what happens then? Control doesn't stop. I'm giving it a bit more time because this is probably the most important aspect of management accounting. It doesn't stop there. Control process is identifying these deviations. This is what control is in management accounting, right? We compare plan with actual results. We identify the deviations. Let me write it in a separate slide because it's really important. So compare actual results with plans. Calculate the deviations. Technically, we call them variances. We call these deviations variances, right? What is a variance? A variance is the difference between the budget, which is the plan, which is made at the start, and the actual results. All right, so we calculate the variances. And one of the topics that I told you here in the syllabus, where is it? It's here, this one. This one, standard costing. This is wholly and exclusively the control process, which is the comparison of the target with the actual and the identification of the variances. What are the variances? Variances means what was the budget, what was the actual, what was the budget for material, how much was the actual cost, what was the budget for sales, how much was the actual sales. All right, so we calculate all the variances, differences, where we achieved and where we could not achieve. Obviously, there will be places where the business have achieved things, and there will be areas where the business has, fell short of their targets. So calculate the variances. If variances are good, it means they have achieved things. That's fair enough. If they're not, then the control process doesn't stop here. Calculate the variances and identify the reasons why we could not achieve. If something is not achieved, like here above, the target was 1,000 units, actual sales are 800, 200 units short. The manager gathers everyone. Why? Come on, guys, tell me what happened. And the employees come up with problems. Sir, we did not have any sufficient staff, or we did not have vehicles, or we couldn't reach our customers. We were short of a resource, or there was some problem, or we were short of funds, something, anything. And the manager says, okay, I'm going to provide you with a vehicle so that you can go to the customer's door if they don't come to you. So you can go to them. So reasons why the variances occurred. In fact, I would call it investigation, analysis. Calculate the variances and then analysis of variances. All right, why it occurred. And step number 4, this is 1, 2, 3, and 4. This is what control process is. 4 is control action that needs to be taken. Okay, control action needs to be taken in order to correct whatever went wrong. The essence of control, please mark my words, the essence of control is control action taken on the basis of that analysis and investigation. If a variance is identified, if a problem is identified and no control action is taken, all that effort has gone in vain. It's wasted. All right, it will be repeated. The same blunder and mistake is going to be repeated over and over again. So control action is basically what the end result of the whole control process is. Often a problem with different governments around the world is that they identify a corruption or something or a problem, but they don't work on it. When they don't work on it, it's, you know, it's just there. It just doesn't go away. Why? Because you have identified something, but now you're not taking any steps to remove it. All right. So hope you got the basics of management accounting. These are the 3 basic things: planning, decision making, and control. This is what we do in management accounting. Any question? If there is any question, you people can ask. Are we good so far?
Yes.
Okay, that's great. Anybody else? Okay, that's great. So I want to make up your frame of mind, right? I want to make up your frame of mind where we are going to be heading, right? So I believe I hope that I'm taking you in the right direction. Things are going to be problem when you start losing where I am heading. Okay, when that happens, you have to tell me. Okay, because I have all the things worked out. I was thinking about the syllabus. These topics are that I'm teaching you. They are not just a hit and run thing that I'm going to just put in everything. No, I have planned everything. I have actually planned all of the topics of the syllabus, their linkage, which topic has to be taught at which time, at which place. So so that you have that overall bird's eye view of where you guys are heading. Okay, so hopefully that you will enjoy and will have a good time. All right, so first thing, management accounting is planning, decision making, control, right? Who does that? Who does planning and decision making and control? It's slightly the introductory classes, maybe 2 or 3 classes, maybe they are just theoretical. We have a lot of mathematical work as well later on. Okay, so who does planning? Can you guys tell me? Management, right? The managers, the executives, they do planning. It's them who does planning in your home. Your parents do that, isn't it? Sometimes they give things in your hands as well. Okay, but most of the time it's the elders, the people who are responsible for higher rank. They do all the planning and decision making. So where they sit in the organization. Now, for management purpose, organization is divided into 3 levels. Right? What I'm trying to teach you now is that management is not only just one or some one person, right? In a big company, we're not talking about small companies. In a big company, right? Management is not just one Management is divided into 3 layers. For management purpose, we divide the organization into 3 parts. An organization is presented as this pyramid shape. You will learn this in your F1 subject as well, right? Right. Organization. This is how organization is presented. It's you may slightly seem a bit awkward to you, but this is what organizations are presented in a pyramid shape. Why it's in a pyramid shape and why is the bottom place it's a huge one and the top one is a small one? It's because most of the workforce in the organization is at the operational area, which is the operational or where most of the work is done. Where here only important people are sitting there, the executives you can say, and they are not there. They are few in numbers. Okay, so for management purpose, organization is divided into 3 levels. At the top level, we call it strategic level. In the middle, we have tactical level. And the lower, we call it operational level. Okay, what do they do? So let me repeat. In management accounting, we do what? Planning, decision making, control. Who does this? Management. Who are management? Management is at 3 places in the organization. Management is not sitting at some one place. We have strategic level management. This involves the top level executives, CEOs of companies, the MDs, and the directors. What they do? Will the directors do day-to-day planning of how much we are going to operate today, how much units we are going to sell to Mr. A customer? Will directors do that? Definitely not. Which plant will be operated 10 hours today? How much skilled labor we are going to allocate to customer A job and customer B job and customer C job? Will the executive be making, the CEOs will be making that decision? The answer is definitely not. So what do? They do long-term planning. And decision making. What is long-term planning and decision making? Long-term planning is what the organization will do in the next 3 years, how we want the organization to stand, where status of the organization, where we want the organization to stand. Do we want the organization to go international or start their operations in another country or somewhere? So that's what they are going to decide. So the director people are going to take decisions. They will have control, but their planning, decision making, and control mainly is for the longer term things, right? For the longer term plans. They are going to decide about the political things, what the political environment is, how we are going to adjust the organization to that, what is the economic environment, how we're going to, they are going to be mainly taking decisions related to the survival of the organization in the long term. Right. In the middle, we have tactical management. Tactical management is basically head of the departments, you can say, production manager, finance manager, sales manager. Every organization is divided into these areas, right? And every area will have their own manager. Like we have a production manager who is reporting to the production director at the board level. Then we have finance manager, we have IT manager. So each department will have their own managers. So what are those managers doing? What those managers are doing, taking instructions from the strategic level and giving that instructions lower down in the hierarchy. These levels are called hierarchy, right? Who will provide the resources? The resources will be provided. Now, this is important to understand. The resources will be provided by the strategic level people because they are the directors. They are the people who owns everything. But will the CEO be responsible for the usage of that resource? The answer is no. Like if I'm the owner of a company, and if I have a company which is like a furniture making company, and we have cutters and everything, so who is responsible? Am I responsible for managing those cutters and polishing machines? And the answer is no. Definitely I will have something, supervisor or manager, who will be basically responsible for managing the workforce as well and using the resources. These people have the responsibility for the usage of the resources. That these resources has to be used efficiently and effectively. Okay, so they provide them with plant machinery, money, finance, skilled labor, people, area, warehouses, stores, buildings, and these managers are then going to use these resources, skilled people, right, to work and to achieve the targets which are decided at the top level. So they are going to take decisions and make plans regarding the long term. They are going to make decisions and make plans regarding the usage of the resources. What will these people do? This is easy. They are going to decide about daily tasks, plan and decide on daily tasks. Okay. So these people are going to decide about the long term. They are going to decide about the medium term, you can say like 6 months, or about the resources usage, the second one. The third one about daily tasks, how to go about the task, which task will be performed today, which one will be delayed for tomorrow, which customer's demand or which customer's order has to be fulfilled today, who is going to work on what today, who is absent. In the absence of him, which labor is going to be transferred to his place. So this is what the daily activities are, and who performs that kind of planning. Like daily planning is basically nothing more than timetabling, scheduling, all right, do deciding who is going to do what and how, and who is going to be allocated to which order and which task. So obviously that needs to be done as well. And who is going to do that? Not the workers. There will be obviously supervisors. There are supervisors here, which are like operational level managers. You can call supervisors as operational level managers, and they decide what has to be done on daily basis. Okay, so now we know in management accounting. I'm going to make it in a sequence, all right, to give you a coherent view. So in management accounting, we do what? Planning, decision making, control. That's the purpose of management accounting. Planning. Who does that planning, decision making, control? We have 3 levels of management. All right. It's not one person. We have 3 types of management. For management purpose, organization is divided into 3 levels. Each level of management decides according to their own activities. They have very distinct activities. The director doesn't decide which customer order has to be fulfilled. And the operational level worker, this guy, he doesn't decide what the political scenario is and how we are going to deal with it the next year. What is the economic environment, how the interest rates and monetary plans of the government are, and how we are going to adjust the organization to that. What are the import tariffs, and are we going to increase our imports or exports? He doesn't decide that. That will be decided somewhere else, right? So that's why these are very distinct activities, these people that they perform. So each managers will, each level manager will perform according to their own nature of activities. All right. For planning, decision making, and control, at whatever level, we need what? We need management information. Now, this is You can say the ingredient or recipe, all right? Management information. We need information. We need high quality information, management information. What is management information? How much kids the director have? Is it management information? No, that's not management information. We don't. Do we need that? We don't need that. That's his personal information. Management information is information regarding markets, resources, anything which is useful to achieve the targets and objectives of the organization, right? So we need planning, decision making, and control. And as I said, that decision making needs to be timely and effective, right? We need timely and effective decisions. We need good control. Let's go back to the control process. We established the control process and we learned what? We learned that it's the comparison of actual results with the plan. Actual results. What is actual results? It's information, isn't it? How much units we made. Internal or external, I'm not talking about that. It's information, yes. If we don't have this information, and if we have flawed information, if someone has increased, like they have actually done 700, but the employee just, deliberately manipulated the books, and someone just to increase the performance said, okay, we have 800. So either deliberately or mistakenly provided wrong information. Will effective decisions be taken? Not at all. There's no way. So we need quality information for, right? What are the plans? And when we make the plans, how much units we are going to sell, okay? Will we need information from the outside world? Yes. You will learn that in your F1 subject, that when an organization is making its strategic plan, what kind of information it needs. It needs information regarding political environment. Like if consider yourself, it's better to put yourself in that position. If you are an executive and you are deciding that how much profit I want for my company in the next year, wouldn't you look at the economic environment or the social or the COVID environment? Will the company be able to make that much sales? If yes, only then you can make a plan. If certainly situation like COVID comes and the government, orders a lockdown, sales are gone. So this is what executives do. They forecast things. They get information from the market. They get information from the political system, from the economic system, from the technological, environment, and they then based on those they make their plans. So you cannot actually imagine a plan without information. What I'm trying to tell you, right? So the planning, decision making, you're trying to decide something. I was actually buying a component for one of my car, which was broke down. So that component was of different types, and I had to ask probably 10 people on the internet because that particular component had a lot of versions, and I didn't know which one to install. So I had to ask 10 people because it was a risk that if a wrong component was installed, it may break other things. So, I'm just telling you that, even if you're doing that much small thing, which is a normal daily life thing, you need information from 10 people. So we imagine business, which, where everything is at stake, the whole finances and the setup and investment is at stake. So need a lot of information. Information is considered a key resource. It's not considered just information, it's a key resource. You're going to be learning this more in your F1 study. All right. However, there is something in some syllabus of F2 is also dedicated towards it, which I have said in the start that I will deal with it later on. All right. Later on means later in our lectures. Right. For planning, decision making, and control, we need information, right? And we need accurate information which is accurate, I can say features of good quality. We need good quality information. What is features of good quality information? All right, number one, information should be accurate. Information should be complete. Information should be reliable, trustworthy. Information should be timely. Right? Information that is provided to management should be accurate, should not have mistakes or errors. If there are wrong figures, obviously the plans made on that basis will be wrong as well. Information should be complete. There should be no missing areas, right? Everything that should be included should be there. Bear in mind that information can be accurate and still incomplete. Reliability means trustworthy. Reliability means what is said is actually true. Well, so if a manager says that our sales are down, all right, so we have less cash flow this year, it means it's the truth. It should not be falsification of information, right? So any information that comes from the outside world, if it has reliability issues, trust issues, if that information can be wrong, obviously the plans made or the decisions taken on that basis will be wrong as well. And information should be timely. Definitely information should be provided on time. Providing information after a decision is taken is of no use. All right? Okay. So this was an introduction of what management accounting is. This is what I was telling you, that we're gonna look at things in very detail, right? So you have to, I am your teacher and I am ready to devote time to it, right? So that's why I explained to you in the start that you have to settle down and give it time. Believe me, the more time you give to it, the more concepts you collect, the more tools you collect, the better it is going to be for you guys. Any questions so far? Are we good with the introduction? It's still an introduction. We have not yet into the management accounting system. It's what management accounting is. That's great. So planning, decision making, control, right? And management, who does that? Great. I want you to repeat that. You are like doing your lunch or dinner, planning, decision making, control, planning, decision making, control. And now you know what planning is, deciding targets for what, sales, profits, production levels, sales volume, decision making. Please do not mind if I repeat things. I just want to punch it in your brains again and again. If I had to tell it like 1,000 times, I will do it. Believe me, I am in this profession from the last 15 14 years, and I know that this is so critical. This is like really understanding the tiny bits of, like, the computer codes. You cannot make the software until you know the codes. This is the coding of the ACCA. So you really need to subscribe to it, right? I don't know how to stress on it. All right, so we do planning, decision making, control. We do it at 3 levels. They have very distinct tasks, and we need very good quality information. We don't need just normal information. We need high quality management information, okay, to do that. That's good. All right. Now, some distinction between some subjects, okay? Distinction means like explanation of, or you can say, often students confuse about what financial accounting, management accounting, cost accounting is. So let me introduce to you the differences between financial and management accounting. You may know it as well, but will you take F3 classes as well, you guys? Are you guys taking all of the 3 subjects? Yeah, that's good. That's good. No, oh, not at all. Okay. Someone said not at all. Okay. I misread it. I don't know. Okay. Oh, F13 complete. That's great. Oh, okay. All right. Anyway, someone is completed it. That's really great. Most of you are gonna take it for the first time. Okay. Difference between financial accounting and management accounting. In short, not in detail, not really needed. We have already introduced management accounting, so we already know what management accounting is: internal planning, decision making, and control. Right? So it is used for internal purpose. Now, some major differences. Number one, financial accounting is the process of preparing financial statements. It is required by law. All right. It is a legal requirement that every business will have to prepare its annual financial statements, which is the profit and loss account and the statement of financial position, and will present it to the users, present it to the market. Right? If anybody didn't know that, it's a requirement of the law in every country. Management accounting, however, is used for planning and decision making and is not a legal requirement. So, required by law for external reporting so that the outside world knows what the business is doing, while management accounting is fully for internal purpose. Why? What internal purpose? For the management own planning and decision making. Okay. Financial accounting has a set format. They are going to, not only it is required by law, it is a requirement of the law, but its format is established format. Like companies cannot make accounts according to their own will or whatever format they present it. No, that's not the case. They will have to present it according to a set format established in the law. You're going to study it later on in your F4 studies. Management accounting is planning and decision making, and it's for the management internal purpose, and they decide in which format they want it, what information they want, and in what format they want it. So it's format decided by management. Format and content both decided by management. Means there is no law legal requirement. Okay. Financial accounting is past looking. Past looking means this is, I think, this is important. If you ask me as a teacher and as a management expert, this is important. Past looking means if we make a profit and loss account tells us what the business did in the last year, right? Like currently it's 2021. So the 2021 accounts will be made when? If a business has a financial year from January to December, the 2021 accounts will be made in December. In fact, not in December, in January 2022, when the financial year ends in 31st December 2021, then in January 2022, they're going to start working on preparing the financial statements. Probably in a week time, they're going to make it. So in like 10th, 15th January 2022, we are going to be learning how much profit the company made in the previous year, which is 2021. Is that right? Yeah. So we call it past looking. In management accounting, we are not looking at what we did in the last year. In management accounting, what we are interested in, what I introduced you to in the start, we are interested in what the business is going to do in the future. It's future oriented. We decide plans, we decide budgets, to decide what we are going to do in the next year instead of what we have done in the past. This is really important. This is what management accounting comes into its own. Okay. All right. I think that's enough. We don't need any further explanation. Okay. Now, the management accounting syllabus has one major part, which is called cost accounting, which is here. And this is what we are going to start our syllabus with, cost accounting. We're going to be discussing section A and B later on. I have done the introduction of it, but section B, as I said at the start, that this includes some really complicated statistical techniques. So we're going to be learning that in our later lectures. So we're going to start with part C, which is the cost accounting techniques. Now, what is cost accounting? All right. Can you give me a minute, please? All right, I'm back. Sorry. I have to take some water because my throat. You guys want a break? What do you think? You guys want a 5 minutes break? I think it's been 1 hour 15 minutes. If you guys want a break, you can tell me. Are we here? Hello, is everybody here?
Yes. Yes.
Okay. Do you guys want to break 5 minutes, 5 to 10 minutes, or 10 minutes maybe? Okay.
I'm good. I'm good.
Oh, so you don't need a break later. Okay. Okay, no issue. Okay, that's fine. That's fine. If you, anytime you guys need a break, you can just tell me, all right? It's no issue. We're not going to rush this subject. As I said in the start, this is not where you save time. Okay, this is where you invest time. So fine. All right, that's good. Okay, so let's move on then. Okay, now we were I have a lot of classes as well and job as well, so you have to be a bit, give me time for things anyway. Okay, so what is cost accounting? That's a major part in the syllabus and what it includes. So let's discuss that a bit. What is cost accounting. Now, often students get confused in management accounting and they're often told that cost accounting is a different thing and management accounting is a different thing. The answer is no. Now, in management accounting, again, once again, we do planning, decision making control. Now, I'm not going on that again, just trying to link it with the other, not subject, in fact, an area. Okay. Now, for planning and decision making control, and as we said that it is used internally, all right, one of the major information that we need is regarding the resources and their costs. What are the major resources? Like material, labor, other expenses and overheads, and how much they are costing. And above all, whatever product we are making, a mobile phone, a furniture, whatever, what is the cost of that product? This is a major question. If we don't know, use your normal knowledge, forget about technicalities. If a company, so for example, if a person is making something in his home, a, a decoration piece, a bucket or something, a collectible item or something, and if he doesn't collect the cost, how much he is making an expense, like giving it flowers or paints or papers or wrapping around it, and trying to just sell it on OLX. And so he's making something, right? This is a person who's trying to make something, and he's not collecting how much cost he's incurring on each thing that he is buying for it. He's not writing it, he's not recording it. Okay, he didn't do anything. So at the end of the day, he made a basket or a vase or something, a flower vase or something, right? He made that. How much he's going to sell it for? He has no information of how much money he has put into it. Now, the answer is he's going to be having no idea whether to put it on $50, $25, or $5. So every expense the business is making, on whether it's raw material or whether it's on labor or expenses or the product, the business needs to record that expense. All of the planning and decision making, what will be the sale price, how much investment we are making into the product, should we launch this product or not, will it be profitable or not, should we go with this project? That is management and management accounting, deciding should we go with the product, should we make this investment. The first thing is, the basic thing is collecting all the costs, right? So collecting cost information is key, and it's the first step of managing things on a bigger scale. Okay, like if an elderly person, head of the family, wants to manage the expenses of his home, decide where to invest money on kids education and whether to buy something and buying a car or not, or extend his home or something, the first thing he needs to know how much money he has, how much is the current expenses, how much are the food expenses, how much we can spare from it, how much we can save from it. So all of the bigger planning and decision making start with the bottom, right? So management accounting is planning and decision making and control, but first we need to record what are the business expenses, how much cost we are currently incurring, and above all, we need to identify and calculate the cost of the product in order to decide the sale price. Right? How are going to be the cost of a product established? We have to collect all these costs. So management accounting has a section, or you can say area of management accounting, which is called cost accounting. Now, people consider cost accounting as a separate subject, and I'm telling you that's wrong, right? That is not correct. Cost accounting is an area of management accounting, right, or subject which is responsible for doing this, recording and collecting cost information. Okay. And then what? Then input this cost information for management planning and decision making. For example, in the start, I told you that this is one decision, that there is a product which is a loss maker. Okay, I told you that a product which is a loss maker, should we close it or not? It's a management accounting decision. Yes, it's an internal decision. There is a product which is making loss. Should the business close it or just continue with it? How do we know it's making a loss? How do we know that? We have definitely calculated the profit or loss on that. That will be the sales of the product minus all the costs. Cost means expenses, right? So let's say the sales is $100 while the cost is $120. So every unit we are losing $20. Now, if there was no cost information, would we know that this product is making a loss? Are you getting where I'm trying to take you to? The decision is whether to close a product. It's a management accounting decision that close the product. Why? Because the product is making a loss. How do we know it's making a loss? That information is coming from somewhere, right? So that information is coming from where? That it has a cost of $120. That information is coming from the cost accounting section. It has all the costs and expenses recorded with it. And whenever management accounting system planning decision making needs it, the cost accounting provides information, right, regarding costs, material, labor, how much expenses are there, what is the total cost of a product. Mainly one of the major thing that we are doing in cost accounting is this, establishing the cost of the product. If you're not getting anything else, remember this. Okay, are we good? Are we fine? Any question? Okay. I hope you people are not bored. I'm trying to make it interesting with my talk and when my examples were, I know it's management accounting, it's no fairy tale stories, and accounting is all like that, but still, uh, you people have to be with me, right? I will try to keep you with me as well, but it's your responsibility to be focused as well. Okay, good. Everything is fine because that's it. That's it for the introduction. Now on, I'm just jumping into the subject. It's still introduction going on. Okay. Okay. So only 2 people said that there is no question. What about the rest? I want everybody to be with me. Who is with us? Okay. Rustam, Tahir, how about you guys? All good. That's great. That's encouraging. So it means so far we have taken this introductory phase. I was really, I was thinking from yesterday that how am I going to do this with people who I can't see, because when I'm in a class and I can see people, I just I get them into some activities and perform things, and okay, if you're making a vase, what are the things that will be needed and what will be the cost of it. So in the class there are things are slightly different. So anyway, we're trying to make it good here. The best thing with you guys is you're good listeners, and so far you are following me. That's encouraging. Okay. All right, so now we are going to start our subject, and we're going to start we're going to start what? We are going to start with the book, and where we're going to start with it is these are the chapters. Okay. Okay. These study material, the book, and the revision kit will email to you. No problem. You haven't received it? Okay, I'm gonna tell the admin people to give you this. Don't worry. All right. This is what you're going to get. Don't worry. No problem at all. I thought you might have got it. Not after this lecture. First thing will be to tell them to send it to you. Okay. All right. No problem. We'll send it to everybody. Okay. Well, no problem at all. Okay. Now we're jumping into the book. Now, what I have done here in my first part of the lecture, what I have done here is I have these two are actually the lectures that I'm telling you that this is the part B, the statistical techniques. I have actually shifted later on in my syllabus, sorry, my course plan. Okay. What I have given you is chapter number 1. I have not actually discussed the whole chapter number 1 because there are some unnecessary things, right? If you give it a reading, it's okay, right? Let me give you what chapter 1 includes. It's you should don't worry that we have already done one chapter in 1 hour. It's not like that. I have only told you only few things. Okay. Okay, this is chapter number 1. See that nature of information means we need information for planning, decision making, control. Data and information should be accurate. See that? Start studying it and you will know that I have given you sufficient knowledge or that you need for to go to the next level. Right? Easy to use. There are features of information. What is the mission of the organization? You probably don't need that. All right. This is what the main highlight of the chapter is. See that? Management accounting process, which is see that. So actually I started with this. I'm just telling you, if you want to study chapter 1, you are ready, you can do that. Okay, decision making control is further explained. Levels of planning, right? 3 levels of planning: long term, short term, day to day. All right, this is the second highlight of the lecture. Then it is explained what these plans are, right, and what each plans include. What is cost revenue? If you don't study this, it's okay. There is no need to study that. I think study only up to page number 10, sorry, 14. That's it. You don't need this. This is slightly technical stuff, and this is the difference between management accounting. You can study this as well. Okay, which I have given you, and that's it. So in the chapter, it's only 4 or 5 topics in which 3 around I have already covered. All right, 3 to 4. Okay, so what we are going to do now is jump to this. So we have an idea of this, a good idea of this, right? What I have told you is sufficient. You don't need the other stuff, which are the tiny bits of technical stuff. I don't want you to put you into technical things right away. Okay. So these two will be delayed later. So I'm going to start with chapter number 4 in full detail right now, which is cost classification and cost behavior. All right. Are you guys ready? First, I'm going to introduce and teach this chapter from my side, what the major things are, and in full detail, not just an overview. We are not going to be making an overview of things from now, right? So, chapter number 4. We're actually starting now, right? The 2 and the 3 chapter is delayed for later on. They have really technical stuff, and we don't need it right now. We don't need to go into probabilities and statistical forecasting right now. That's out of question. Okay. What is in chapter 4? What did we study? So actually, I'm starting with chapter 4 because it is a direct link with it is directly linked with whatever we are doing currently, which is management accounting and cost accounting. Right? So we are now studying cost accounting, and which I told you that cost accounting has a big area of the syllabus. So what are the cost accounting chapters? The cost accounting chapters are starting from here, and it goes all the way to here. These are all, in fact, including this one, actually, September 11. It's like 3, 4, 5, 6, 7, 8, around 8 chapters. I'm starting with. In cost classification, we're going to learn what costs are, what type of cost the business incurs. So we already studied that in management accounting, we need basic information regarding the product cost, material cost, labor cost, and where that information is going to come from. That is going to come from the cost accounting section, all right? The cost accounting records of the management accounting. So the cost accounting records will provide all the cost information. So in cost classification, chapter number 4, we are going to learn what major costs are, what are the types of cost, and we're going to learn how each cost behaves. So chapter number 4 is introduction to the business costs. There are 2 topics that we are going to read. Classification of costs. Classification of costs simply means what major costs are. What types of costs the business incurs. And second, very important aspect is cost behavior. Cost behavior means how cost responds or change when a certain activity changes, or when the business increase or decrease production. Will costs remain the same? Will they increase? Will they decrease? There will be some cost that will increase. There will be some cost that will decrease. There will be some cost that will remain unchanged. So we need to know the behavior of the cost. If manager doesn't know the behavior of the cost, so he will not be able to decide as well. So 2 things, okay? 2 things. Number 1, what type of cost the business incurs? How cost behaves? What are the behavior of cost? Different types of cost behaves differently. Some increase, some decrease, some increase with a greater speed or proportion, some increase with a lesser proportion, right? Some decrease drastically, some decrease, with a lower rate, some remain unchanged, some remain unchanged up to a certain level and then increase or decrease. So we're going to learn that. Why? Because often managers decide about the business production. Okay, sometimes they need to increase the production and sales if the conditions are really good. Sometimes they have to decrease the production if conditions are bad, like COVID or something happens and they have to cut down the activity. They need to know if they decrease the production or increase the production, how will be the situation, what will be the situation of different costs? Will major cost increase or decrease or remain the same? Then what will be our situation? Will we make profit or loss? The manager won't know whether he's going to make a profit or loss if he doesn't know the behavior of his cost and what types of costs are there. So what are the major types of costs and how cost behaves, right? So let's start with the first one. What are major costs? Now, costs are classified in two ways. So we are on the first one now, okay? What are the major types of cost? So our lecture now is cost classification. Cost classification means types of cost. Now, one classification or categorization is by function. By function means by department. Function is an area of a business. If someone asks you what are business functions, right? Business functions are production, sales, marketing, IT, finance, warehouse, all of these areas in which the business operates or activities that the business performs are called business functions, all right? And for each function, normally there is a separate department. If you know from your general knowledge, every company has these department, production department, sales department, finance department. They are actually called functions, production function, sales function, finance function. And each department incurs its own costs, right? So one category that you need is called, you need to learn simply, it is very simple. It's called functional cost. You may be asked in the exam, what is a functional cost? A functional cost is the cost of various functions in the organization. Okay. Examples? Production function, marketing, finance, IT, sales department, distribution cost, and so on. You can think of functions on your own. All right, distribution function, research and development function, and other functions. So the cost of those functions, the total cost of every department will incur expenses, right? For example, in finance department, there are people working, there is stationery, there is electricity, there are people, they are given salaries, right? There are computers and equipments being used. So the total cost of the finance department is called finance cost, and it's a functional cost. All right. Now, one of the major functions in all of these ones, the one I wrote, which one will incur the heaviest cost? Tell me. Come on. Which one of these will incur the heaviest cost, like more cost? Which one will have a higher cost, I would rather say? Which one of these will have very high cost?
Production cost.
Definitely production cost, because there are products made, there is raw material, there is labor working, there are components being made. Definitely, that's good. So the production function has a major cost that is incurred there. Now, let's explain production cost in more detail. We also call it product cost. When a company makes a product, this is called classification by product. First one was classification, means categorization or explanation of the cost by function. This is classification by product. We also call it product cost. When a company makes a product, in the production department, what types of costs are incurred while making a product. Now, this is the source code. Okay, this is the source code. You will come across these terminologies that I'm going to tell you now almost everywhere in your ACCA. So when a company is making a product, what type of costs are incurred? When a company makes a product, normally three costs are incurred. Okay, material, raw material are bought, so there is material cost. Labor, and then okay, fine. So let's say let's give it a real life situation. Let's imagine a company is making furniture, tables, chairs, and right. So when it's making tables, chairs, and furniture stuff, what type of cost it incur? It will definitely use wood. It needs skilled labor, right? Polish and furnish, and expenses. What are the expenses? Expenses are the machinery, electricity, right? And the things that gas charges, utilities, because that is not material, that is not labor. Often students get confused in material and expenses. What is material and expenses? Whatever is becoming part of the product, component part of the product is a material. For example, for a car, the wiring under the hood or the dashboard, the wiring, even if it's a small wire, it's not an expense, it's components, it's raw material. So whatever is forming part of the product, which is an ingredient or forming part of the product, even if it's a small one, it's raw material. All right. Whatever is used to convert the raw material into the product is called expenses. All right. Okay. Are we good? Are we good? So when a company makes a product, three types of costs are incurred: raw material, labor, and expenses. Okay. Apply this on any product and you get the same. Car, components, raw material, labor, people who are working, expenses, the equipment, the machinery, the assembly line, you may have saw it in the TV, no? They are expenses. Okay. When a company makes a product, three costs are incurred: material, labor, expenses. These three costs can be direct costs and can also be indirect costs. Now, the technical stuff starts. Okay, so we have material, expenses, three costs. These costs can be direct, so we can have direct material, direct labor, indirect expenses. I'm going to tell you in a while what direct and indirect means. These expenses can be direct and they can also be indirect. So it means we can have indirect material, indirect material, indirect labor, and indirect expenses. Okay, what is direct and indirect? Direct material or labor or expenses are those expenses which can be identifiable or traceable with one unit of a product. Okay, which about which we can tell that this particular chair has $5 of wood, which is like 2 kg, or one plank of wood, which costs $10 or 15, whatever. So we can establish the amount. Major part is the amount we can establish. We know that in this one chair, $5 or whatever, say $10 of wood is needed. This is direct. So direct expenses are those which can be established or traced to one unit of a product, right? So direct material is that material which can be established or traced to one unit of a product, like wood, as I gave you the example. Direct labor will be that labor about which we can say that this labor works 2 hours and he is paid at say $6 per hour. So 2 hour times 6 is 12. So this one chair, for this one chair, we are paying $12 of wages. This is direct labor, right? The definition will remain the same. Any cost, whether it's material, whether it's labor, whether it's expenses, if we can trace it to one unit of a product, it's a direct cost. So I gave you the example of direct material. Wood will be a direct material for the furniture. The wages which is paid per unit, which we know that this one unit will be given this much wages for the labor, is direct labor. Direct expenses are all those expenses which we know that we will incur per unit. For example, there is a polishing expense, not a polish. So it's an expense paid to one person or for that polishing packet or something which is need to clean the furniture. So if one packet of cleaner liquid is used to clean and that one packet costs $1, so we know that each chair needs $1 of polishing expense or cleaning expense. So that is basically a direct expense. Indirect material, indirect labor, indirect expenses. In short, indirect costs are those costs which are not identifiable with one unit of a product, right? For example, in a chair, there may be glue used or some nails or other stuff may be used, which we don't know how much quantity and what will be the cost of it because it may be used from a big packet or something. So we cannot establish the cost of few nails, which is becoming part of it, but we don't know what the cost of one chair may get 5 nails or the other may get 7 or things like that. All right. So if we don't establish what the cost of those nails or that particular item will be, which there may be few things which is becoming part of it, okay, but about which we can't establish. The example I gave you that for a chair, different types of nails are used, and some nails are used from a packet, and some are used from from a bowl where there are a bunch of nails and they are there and they are just picking it from it and just putting it into the chair. So that is a situation where we probably would be able to establish what the cost of those nails will be. It's becoming part of the product, but we don't know it how much the cost of it. So it's the indirect material. Indirect labor is simple. It's not difficult. Say I'm taking one particular example of a furniture manufacturer. All right. So for example, in an area of production where the furniture is made, there is a supervisor, and the supervisor is basically supervising all the production. He's not making anything. He's supervising the production. He's looking at the labor, who is doing what, or is everybody following the schedule, right, which is made, and he's getting $1,000 salary. All right. He's not. So can you tell me what the supervisor's salary will be per chair? We can divide it, but that will be an arbitrary measurement. Like we can divide, like for example, there is 1,000 chairs that are made in a month, and his salary is 1,000. So if you tell me that, sir, we can divide like $1,000 divided by 1,000 chairs, so $1 per chair. Yes, we can do it. But what if next month they made 500 chairs? Then we are going to divide or charge in each chair $2 because 500 $1,000 divided by 500 will be $2. And in the next month, they only made like 200 chairs. So it's going to be arbitrary. Technically, his supervisor salary per chair will not be known. All right. So that's an indirect labor example, supervisor salary. Third one, the indirect expenses. Can we say that in each chair or just like each pen, how much electricity is used? We can measure electricity in terms of units in a bigger item, like an aeroplane or a house being constructed. But small items like a pen or a chair or a small thing, can we know how much electricity? Electricity is definitely used, but do we know how much is the cost of that? Answer is no. So this is basically called indirect expenses. We got it. We got the example of all. So direct expenses are those which are identifiable with one unit of a product or a cost unit. I'm going to explain what this is. Indirect cost is which is not identifiable with one unit of a product. So in a product, we incur three costs. These three costs can be direct and these three costs can be indirect. They are all part of the product. So when a company makes a product, begin once again. When a company makes a product, three costs are incurred: material, labor, expenses. We have direct material, direct labor, direct expenses. Together, they are called prime costs. This terminology will be asked, not maybe, will be asked in the exam. Prime cost. So prime cost is what? Prime cost is all direct costs are called prime. Okay. With the prime cost, we add the indirect cost. The indirect costs are together, they are called production overheads. They are called production overheads. The addition of it. So they are all added and they are added to the prime cost. So there we go. You get what? You get total product cost, here total production cost. All right. Production overhead is simply the total indirect cost. So when a company makes a product, we incur prime costs, which are direct costs, direct material, direct labor, direct expenses. And we incur three costs: material, labor, expenses. We have direct material, direct labor, direct expenses. We have indirect material, indirect labor, indirect expenses. Direct material, labor, expenses are called prime cost. Indirect material, labor, and indirect expenses are called production overheads. Prime cost plus production overheads is the total production cost. Whether direct or indirect, they are incurred for a product. They are incurred for a product, for the product. So they will be part of the product. Why we are making the distinction then? For control purpose. There is a huge, big reason why these are made in these categories of like direct and indirect. This direct and indirect category is made for a reason, not just by the way. What I'm going to explain it a bit to you guys in a while. Okay, first I'm going to explain to you what this thing is. Direct expenses is that, or indirect, which is known. Direct expenses is that which is known for a product or a cost unit. Okay, what is the cost unit? Let me explain to you from my own. Okay. Imagine you're buying a crisp or a chips packet from a shop, right? And the shopkeeper is selling each packet individually. So for him, that one packet is 1 unit, right? So he's going to check his direct or indirect cost with that 1 unit. Okay. Imagine that shopkeeper is buying his crisps or chips from another shopkeeper who is a wholesaler, and he's not selling each individual packet. He's selling a carton. So one person is selling the bag, which is bag of the chips. It's a weird one. All right. Shopkeeper number one. Shopkeeper number one buys from number two, and the shopkeeper number two sells carton, and each carton has 10 packets. He's not selling individual chips items, he's selling a carton. So for shopkeeper number two, the unit of measurement is what? With which he's actually carrying his activities, making his trade, and also looking at his expenses and sales. For him, the unit is not one packet of the chips. For him, the unit is one carton. He's going to sell, he's going to measure that how much cartons I bought today and how much cartons I sold today. So if he's incurring, for example, a loading cost of $1 per carton to a labor, right? He's loading the cartons to his shop or to the vehicle, and he's paying $1 per carton to a labor who is basically loading his cartons to the shop or to the vehicle, whatever delivery vehicle, and he's paying $1 per carton. That $1 per carton is not per chips packet; it's per carton. Because he's not operating on the basis of each unit individually. For him, the carton is the unit. This is why it's called a cost unit. So here, the cost unit is what? The cost unit is one carton. Okay. Similarly, you're buying a cold drinks or a can of Pepsi or a Coke or something, okay, from a shop, and that shopkeeper is buying from someone else who is selling crates, okay, and he's dealing in crates. So he's like buying number of crates and selling number of crates, and he's also like with the delivery vehicle, he's also paying per crate, or that if you take 10 crates, I will give you this much. If you try 20 crates, I'll give you this much. For him, the number of crates will be the cost unit. So a cost unit is a unit of a product or a batch with which costs can be associated. Okay. A cost unit is a unit of, is 1 unit. A unit means is 1 unit of a product or a batch. Batch means group. Is a unit of a product or a batch with which costs can be associated or attached. Right? So for someone, 1 unit of a product will be a unit, and for other businesses, one batch or a crate or a carton or a box will be a batch. Did you get it? That's why in my definition of the direct and indirect cost, I said that direct costs are those which are identifiable with 1 unit of a product or a cost unit, because for some businesses, they may be operating on on a batch, on a group like a box or a carton. So we're going to look at direct and indirect cost per carton and per crate for him. If he's paying to a labor per carton or per crate, that's a direct cost because he's not dealing in individual units of product. Did you get this? Okay, so let's repeat. Product cost is when a company makes a product, there are 3 costs: material, labor, and expenses. These 3 costs can be direct costs, direct material, direct labor, direct expenses. And these 3 costs can be indirect costs, which is indirect material, indirect labor, indirect expenses. Direct costs are called prime cost. Indirect costs are called production overheads, right? Direct costs are those which can be associated with a unit of product or a batch, and indirect costs are those which cannot be associated with a unit of product or a batch or a box or a carton. Okay, now why is this distinction made here? This is important, and this is going to be discussed later on. There is a whole chapter on it, and it's this one. Not one, two chapters. These two chapters relate to this phenomena of the overheads. All right, and I'm going to introduce the problem to you guys right now because it's not rocket science. So I'm going to introduce the problem to you guys right now, that there is a problem with these overheads. And in summary, in very short. Now, in the previous slide, we learned what? We learned that we need to establish the cost of a product. This is key. Every business wants to establish the cost of a product. How much is the expense or total cost on one unit, so that we can decide the sale price and things. I'm going to come to that as well. All right. Now, here we learned what? Here we learned that, are you guys with me? Is everybody with me? Can you guys hear me? All right, that's good. Thank you. Okay, so we need to establish the cost of one unit, right? Cost per unit of what the cost of one unit will be, so that we can establish sale price and make profit. Now, the cost of a product include direct costs. Right? These are direct costs. We already know them per unit, right? How much is the material? Material is spent. How much is the labor? Labor is $20. How much is the expenses? Expenses is $4. So prime cost is what? It's 24. Why we know that? Because it's a direct cost. If you ask me, how do we know it? It's being recorded. We already know. If we don't know it, then it's not a direct cost. Okay. So the fact that it is a direct cost means that we know how much per unit is incurred. So material is 10, labor is 20, expenses are 4, total cost is 24. Okay, that's prime cost. These costs are what? Are they known per unit? Are they known per unit? Answer is no. We don't know them. We know them in total. How much is the supervisor salary? How much is the rent? How much is the electricity bill? But we don't know how much is the electricity bill per chair. All right. So we don't know the electricity per chair. We know the electricity in total. We don't know per unit. We know the rent in total of the factory. Factory has the rent. It's on rental. So there is a $10,000 rent that is being paid for the factory. Even if there is no production, the rent will be paid. So how much is the rent per chair? How much is the rent per chair? Probably it's almost hard to establish. Supervisor salary. So we know them in total, but we don't know them per unit. Now, if we don't know them per unit, how do we calculate the total cost per unit? We can calculate the total production cost, but if we want to calculate the cost of one unit, if you want to calculate the total production cost, it's not difficult because we just add all of the cost. The total, say, for example, a company makes 1,000 chairs. So the total material cost, total labor cost, the total indirect cost, the total rent, salary, everything, right, of the production area. Okay, that is included. Okay, that's the total production cost. What is the cost per unit? Now that is a problem, because some costs are known per unit, which is the direct cost, some costs are known, which are the overhead. So how do we calculate the cost per unit? Now, again, if you ask me, a teacher, we can divide it on the number of units. And I already answered that you can do that, but that will be arbitrary, right? So how do we establish the cost per unit? Now, the problem is not with the prime cost. This is okay, because these are already known per unit. The problem is with the production overheads. They are not known per unit. So how do we make them per unit? To calculate the cost per unit, we need to calculate the cost per unit must. This is must. We need to calculate the cost per unit. Okay. So how do we make them per unit? We are going to learn that in chapter number 7. Okay. So that's why this distinction is made that these production overheads are actually costs that are not known per unit. So how do we make them per unit? Okay. On a reasonable basis, like we can use an unreasonable thing, like we just divide it on the number of units, but that's, as I said, that's going to be arbitrary and it's not going to be good. It's not going to give us a realistic cost. We can't do that. We want to get to a realistic cost. Okay. All right. Few more things. These lectures are going to be a bit, F2 is going to be a bit cumbersome, you can say, or really, you can say, you can see already we are just learning what is what, who is who, and what is what. This is what the whole point is. All right, I will encourage you again. I'm ready. I have actually devoted probably in all of our academy lecture course. Mine one is having 4 or 5 more lectures. It's not that I'm going to like take 3 months more than that. No, but probably 3 or 4 lectures more than normal because we have a lot of content to cover and we have to actually learn things. We will do a lot of practice with after every chapter. We are going to do revision kit questions. Right? We're not going to leave any stone unturned. So whatever we learn, practice, chapter practice, chapter practice. We're not going to be like doing practice after 3 chapters together. No, it's not going to be like that. We're going to try to do practice after each chapter, right? So that will be a highlight of our course as well. Okay, few more bases of the cost classification. These production overheads are those indirect costs which are incurred within the production department. Okay, this is important to learn as well. Everything is important F2, but again, focus. Right? These overheads or indirect costs are those indirect costs which are incurred within the production premises or department. Right? Production overheads are of two, not production overheads, overheads are of 2 types. The overhead word literal meaning is an indirect cost. Indirect cost. Indirect cost means which cannot be associated with 1 unit of production. Overheads are of 2 types. One is called production overheads. Which is also called manufacturing overheads. For overheads, I am going to be using the short terms of OH. And what's called the non-production overheads. Which is also called non-manufacturing overheads. Production overheads are those indirect costs which are incurred within the production department, which I have already explained, which is indirect. Different color. Indirect labor. Indirect labor. Indirect expenses. Non-production overheads are all those indirect costs which are incurred beyond the production department or in other departments. Sales department cost, overheads or costs, distribution, marketing, I think my pen charge has finished. Anyway. You give me a 2-3 minutes, right? So let me tell you orally. Okay, so production overheads are all those overheads which are incurred during the production or within the production department, which is indirect material, indirect labor, indirect expenses. Other department will have costs, or which we say other functional costs, right? Like sales department, distribution, marketing, IT, finance. They are called non-production overheads. They are costs which are incurred other than the production. Okay. We are not going to include these costs. We are not going to include these costs in the product. They are not included. Why? That's why they are called non-production overheads. So now in overheads, we have production overheads and non-production overheads. Okay. Production overheads are those indirect costs which are incurred within the production department. Non-production overheads are those costs, all of those costs, not only one, all of those costs, which are incurred other than the production. And we are not including them in the cost of the product. All right. Now here, students get confused that if we're not including it in the cost of product, where do we include it? We are not including it in the manufacturing cost of a product. One is called the total cost of the company. We include it in the total cost of the company. One is called the factory cost or the manufacturing cost. You might have heard someone telling you that I got this product and I got this on factory cost. Factory cost, by factory cost, it means that it does not include other expenses of sales, marketing, distribution, and carriage and other expenses. It only includes the manufacturing expenses, right? Here we need to make a distinction between the manufacturing cost of a product and the total cost of the company. Okay, so when we are talking about from now on about the manufacturing or production cost, we are only talking about the cost incurred in the factory or the production area. Okay, so the cost of a product includes what? The cost of a product includes the direct cost incurred in the production and the production overheads. Those costs indirect which are incurred in the production. All right. So there is a question that might appear in your brain. What are we going to do with the other question? How we are going to recover it? What happens is that a product is made, direct production cost and indirect production cost together. Say the total cost is $50. This is the total production cost. It's $50. Then a profit is added to it. Now that is the trick. How much profit we add to it in order to cover all of the rest of the company expenses. Obviously, we don't want to add $1 to it. If a product has a factory cost or a manufacturing of $50, will we add only $1 profit to it? The answer is no. Will $1 cover the rest of the expenses? So what happens is we add sufficient profit to it, like say $20 or something, so that the resulting sale price will be enough to cover the rest of the expenses, the selling, distribution. So we cover the rest of the expenses with the price, but we do not include them in the manufacturing cost of the product. Okay, so now you have to make a distinction between the manufacturing cost and the total cost of the company. Manufacturing cost is only the manufacturing ingredients, whether direct and indirect. So again, When we are making a product, we're incurring three costs: material, labor, expenses. There can be direct and indirect. Indirect is called production overheads. Production overheads are added to the product with the direct cost. Okay? With the direct cost, we are adding what? We are adding production overheads and calculate the total product cost. There can be non-production overheads as well. They are not added to the manufacturing cost, but they are covered from the other profit margins. Okay? So far, so good. Right? And something in the end of the cost classification. Why we need to calculate the cost of the unit, cost of one unit, cost of one unit, the cost per unit product. Why do we need that? If we don't know it, what will happen? Right? So the calculation of the cost per unit, here I will say cost per unit. Why? Now, few very simple and major reasons. Number one, we need to know the cost per unit in order to establish sale price. We don't know the cost per unit. How do we establish sale price? Okay. Some product may have a sale price in the market, but still we cannot establish sale price for product until we know how much cost it is. If you remember in the start, I gave you an example of a person making something in his home and he is not recording what the costs are. And he wants to list it on OLX for how much he's going to sell it. You're never going to know it. Number two, to establish how much profit he's going to get from it. If he doesn't know the cost, he cannot establish the profitability. So in order to know the profitability, and the profit is what? The profit is the sales minus cost. And the third one is control. Cost control. Control simply means cost control. We can only control costs only if we know how much costs are incurred. If we don't know the cost incurred and where the costs are incurred and how much costs we are incurring, how do we control it? We will not be able to control the cost until we know where the costs are incurred and how much costs are incurred. So, and what those costs are. So if we don't know how much, we have no record, how do we control it? How do we know whether it's higher or lower? Okay. So this is chapter number 4. It's not finished, don't worry. It's chapter number 4. Topic number 1, cost classification. Okay. So we studied functional costs and we studied product cost. And in product cost, we studied direct and indirect cost. Direct costs are prime costs. Production overheads are indirect costs. Okay. Overheads are two types: production, non-production. We only include production overheads in the product cost. Direct costs are those which are known per unit or with a cost unit. Indirect costs are those which are not known with 1 unit of a product or a cost unit. That's for topic number 1. We still have around 15 minutes. That's for topic number 1. If you guys have any question, please ask. Are you people with me? One person has gone. I think this is too much for him or her. Any question, guys? Any question? Anything that's bothering you? I hope I have made everything clear. Anything is bothering you, please let me know. Good. Okay. For Selvan, Nabiha, and Rustam, or Claire, that's good. You have the basics now, and I'm happy that I didn't know that I will be able to convey it in that in a proper manner. But the for me as a teacher, I even I even teach stage three students. You know, this is the hardest one. This is the hardest lecture I ever deliver, to get the students to know things and bringing them to the right track. All right, that's good. That's encouraging. Okay, I want your because every class has different phenomena and mechanism. Is my speed okay? Talking speed and also the way I deliver things, because sometimes even from me students say that sir, this topic is too fast. There are too many things at too little time. So I have tried not to do that. Or is it too slow? Do you feel, is it too slow or is it okay? Should I keep it like that? All right. Okay. So what I am currently, I have decided for the class is it's totally fine with you. Okay, that's great. That's great. If you don't want me to like speed up or include too many things or like slow down, it's fine. All right, that's good. That's good. Okay. Someone has asked that the class. No, class is not going to last till December. Class is we're going to run it Saturday, and probably after 2 months, in like August, September, October maybe, or in November first week, we're going to make it like 2 times. So November, I think November is going to be, so you are ready to give your paper in December. So November is the time, right? And don't worry, we are going to study like this, slow and steady, and it's so you will have time for your paper. We have planned it out, all right? We have planned it. It's not that we're going to like lengthen it. As I said that when I told you that you're going to settle down and give it time, and it doesn't mean that we're going to shift it to the next session. So your session is no problem at all. The session is going to be intact, and we're going to plan it. There will be few extra classes needed, so it's not going to be one class. Actually, they told me, yeah, yeah, fine. I can open your mics. Yes, you can ask questions. Well, in fact, I have left your mics open. No, it's there closed. Okay, you can. Yes, okay. Allow participants to unmute. Okay. So it's better to keep your mic closed, because sometimes interruptions, if there was a small interruption at the start, because my home people didn't know that I'm taking the classes. People entered, and my little kid entered as well. So I got a bit to them that I have a class, so please keep out. So at that time, my focus was slightly shifted, and you might have felt it when I was introducing that control and other process. Even slight interruption can disturb things. All right, so and that's great. Any other thing that you guys want? You have good understanding of the topic? Are we good? All right. We still have around 20 to 25 minutes, so I would like you guys to introduce you to the second phase. I'm not going to finish the chapter because we are going to do practice on it as well. So I'm going to introduce you. Let's look at the yes, only for these two ones. Yes, only for the chapter number 2 and 3. The rest is going to be the same. Okay. So I'm not disturbing the order. The reason I explained at the start that those two chapters has too much statistical and mathematical stuff, which is really technical. And I want you to have a taste of management accounting, and what planning and decision making, and then what costing is, so that we go to the basics of that. So those chapters will be done at the end, only for them. The rest of the whole order will be the same as the book. Okay? And I explained that to you at the start. Where is that? Where's my book? Yeah, this one. Right? So I have only shifted these two lower down. I actually started with chapter number 1. In the first hour, I ran chapter number 1, all right? So I shifted this lower down, all right? The rest is going to be, don't worry about it. Rest is going to be exactly the same. That's why I have not, changed the course plan as complete, completely. So I have not discussed it because that is the only thing. So I have orally told you that this is what my plan. We are going to be. Let's see what my course plan will be. I have already made it, and probably you might have got it till now. Where's our course plan? I think course plan. Yeah. You said lecture number 1, cost classification, cost behavior. Okay, so I've actually gone with that, and then material, labor, and overhead absorption margin. So the rest is going to be in the same order. Okay. All right. So now let's not waste time. I gave you a few minutes to settle down. Let's jump into the second phase of chapter number 4. Which is cost behavior. So cost classification, as you guys told me, you are all good with it. Now let's start introducing cost behavior. This is more important than the cost classification, right? What cost behavior is? Let me introduce you to it. Cost behavior is how cost changes mean increase, decrease, remain the same when activity change. Activity means production. You can say production. If production changes, will cost increase, decrease, remain the same. Production change means production increase or decrease. All right. Now, why is this necessary? Managers need to know what the costs are, okay, in order to control their activities and decide for the business, planning, decision making, control. So keep that in mind. So managers need to know what their costs are. That is crucial, but equally crucial is how the cost will change if they decide a change in the production. Because as you know, from your practical life experience or knowledge as well, managers decide to either increase the production when situation is good, and when markets are good, and when conditions, economic conditions are flourished and good. So manager often decide to increase their sales. So to increase their sales, they will often, I think someone door anyway. So to increase their sales, they need to know, if we increase the sales, if we increase the production, what will be the costs, and how, that is important, but how will the cost change? How will different costs change? For example, let me give you an example. For example, a manager is selling currently 10,000 units. Let's put in, they say that things are always good when you put into figures. So let's decide that. Not discuss that. Okay. Say, what is it? Say currently business is making 10,000 units. This is the current level of production. And at 10,000 units, they are incurring a cost of 50,000. And their sales are, say, 60,000. Okay. So they have a profit of, say, 10. Now, they want to increase the production from 10 to 50. They think that conditions are at 11. They say that conditions are really good and let's increase production. We can sell 11,000 units. Okay. So with 11,000 units, say the cost will become 66. All right. And the sales revenue and the cost will be 56. What will be the profit? The profit is 10. It's the same. So is there any effect of increasing the units? The answer is no. They are better off selling 10 rather than 11. Why? Because the sales and the cost increased by the same proportion. But now let's imagine that the sales increased by 6,000 while the cost increased by 8,000. There was a rental cost or something that was increased more than normal. They were not expecting that, but it increased. So the increase in the cost will be from 50 and plus 8, it will be what? It will be 58. So the profit will be what? The profit will become 8,000. So the profit will drop from 10 to 8. Why? Because one of the costs increased slightly disproportionate to what they were expecting. Now, should they increase the activity from 10 to 11? Are you getting what I'm saying? There was one cost which increased a bit more than normal. There was an unexpected increase in that. This is what cost behavior is. Some cost will increase in proportion to the sale. Some cost will increase by more than sale. Some cost will remain the same. The manager needs to know the behavior of the costs in order to take decisions regarding whether to increase or decrease the sales volume. This is so critical. In my opinion, this is more important than merely knowing what types of costs there are. Managers should not only know what types of costs there are, they should also and always be aware of, all right, be aware of the cost behavior, how each cost will behave, increase or decrease if we take this decision. If we increase the volume, what will happen to the material? What will happen to the labor? What will happen to the rental expenses? What will happen to the electricity? How will they increase? Will they jump? Will they remain? Will they increase by a slow proportion? They increase by a bigger proportion? Will they decrease? If a manager doesn't know this phenomena, right? If a manager doesn't know this phenomena, never on this earth can he make a knowledgeable decision regarding the sales and production volume. He will always make a mistake. He can only make a reasonable decision only if he is aware of the behavior of these costs. Okay, this is what the behavior, this increase, decrease that I was telling you is called the behavior of cost. Okay, now each cost behave differently. All right, each cost has a unique way of behavior. Some increases drastically, some increases in high proportion, some increases in an average high proportion, some increases in a lower high proportion, right? So every cost may behave in its own way. Normally, there are 4 cost behaviors, okay, which I'm going to introduce you to now. This will be the last of our today's topic. So normally cost behavior, every cost behaves in its own way, but generally 4 types of cost behavior is found almost in majority situations. Number one, called variable cost. Any cost. Now we cannot associate it with either this material or this labor or any cost, which increases when activity increases and which decreases when activity decreases is called a variable cost. And variable cost in total. In total means for total units. So it's that cost which increases when activity increase and decreases when activity means volume or production activity decreases. Okay, and in a same proportion. This is also condition. It's very simple. Do not be afraid that this is something technical. This is probably the easiest part. Things which we studied are more technical than this. So a company is buying a component. You are buying something. Right? Buying a company is buying a component, $10 one unit. If it's 1 unit, $10. 2 units will be how much? 23 units will be what? 34 units will be what? 40. And the proportion is the same, right? Okay. So if you're buying 1 unit at 10, 2 will be 20, 3 will be 30, 4 will be 40. There can be discounts, but we are not discussing the unusual things right now, right? So this is what variable cost is, that it increases when activity increases and decreases when activity decreases. And we present it with a graph. There will be graphs that you will be asked in the exam. And the variable cost graph, this is activity on x-axis and the cost is on y, and the graph behaves like that line. Okay, so if 1 unit costs $10, 2 unit costs 20, 3 unit costs 30, and so on. So 3 units will cost. So the more units, the more cost. The less units, the less cost. So with increasing activity, this cost increases. With decreasing activity, this cost decreases. This type of behavior is called a variable cost. Any cost which behave in this fashion is called a variable cost. Okay? Fine? That's it. We don't need to know anything else about it. Number 2. Costs are either variable or fixed costs. Right? Variable costs are those costs which increases when activity increases or decrease when activity decreases. That is variable cost in total. Fixed cost in total amount. Fixed cost is that cost which remains the same or fixed. Okay, regardless of the increase or decrease in activity. Simply regardless of the activity. It remains the same. If manager increases, the production increases, sale volume, it's not affected. Example, the material example is the raw material example, the variable cost, sorry. For the fixed cost, the example is simple, rent, factory rent. The company has a factory and they have the factory on rent. They're paying the rent of like $10,000. So if they are making 1 unit, they're paying 10,000. They're making 10 units, paying 10,000. They're making 100 units in the factory, 10,000. They're making 1,000 units, 10,000. No matter how much units they make in it, if the space is available, obviously. So they are paying 10,000. Even if they don't produce anything, but they have rented it. Okay. Will there be a cost? They don't produce any unit, but they have rented it. They have made an agreement. They will pay the rent. Yes, they will pay. So the graph will do what? The graph is very self-explanatory. Activity. So if the rent is 10,000, it doesn't matter if, even if zero activity, it starts with this. It doesn't start with the zero origin. Okay. The reason it doesn't start with zero origin is that even if there is zero activity, this cost will incur. At 1 unit, this cost will incur. If 100 units, 10,000, 1,000 units, 10,000, 2,000 units, 10,000. So, sorry, just straight. No matter what the activity is, even at zero activity, there will be a cost. Okay, so fixed cost remains the same regardless of the level of activity. Even at zero activity, there is fixed cost. That's why it doesn't start with here, from here, and it doesn't go along with the units because it remains fixed. Okay, so 100, 200, 300,000, 10,000, the cost is 10,000. All right. Okay. Number 3. Number 3 is called stepped fixed cost. Okay. Now, what stepped fixed cost is that it's a fixed cost. Okay, it's a fixed cost. It remains the same. So there is activity increasing, and it remains the same. But then an activity comes, all right, that if the business goes beyond that, it jumps, and it doesn't jump like a variable per unit. No, it jumps at once. Example. We give you an example. In fact, let me draw a graph. And definition. I'm going to give you example. You're going to get it. It's easy. It's not difficult. So don't worry. So, fixed cost in total increase. Why I'm writing this total is we're going to study the next time. Next time, we're going to be looking at the same chapter and the practice question. Okay. Step cost is that cost which remains fixed. Up to a certain activity level. Fixed cost, the above one, remains fixed regardless for whatever activity. This is fixed, but up to a certain activity level. And then increases. How? What a step cost looks like. So what happens is that on zero activity, there is a cost. Then for 100, 200, 300,000, whatever, say for example, let's up to 1,000 units. There is a cost of say 2,000. These are hypothetical figures. But as the activity goes beyond 1,000 units, then it remains the same. Like for 1,100, 12, 13, 14, 15, 16, 17, 18, 19, 20, 2,000, then the cost is this, the second step, which is say 4,000. Then as the activity goes beyond 2,000, okay, then it increases once more. Okay, so it remains the same from 0 to 1,000, which is at 2,000. From 1,000 to 2,000, it remains fixed at 4. So if the activity goes beyond 1000, there is a one-time increase. And if the activity goes beyond 2000, there is a third increase. And then from 2 to 3, it remains the same and follows on. Okay, one of the classic example of this is, for example, a business rents a warehouse. This is a very typical example. Business rents a warehouse. Warehouse can keep up to 1000 units. It's motorbikes, and we need to stock the motorbikes, right, or keep it somewhere, and we rent warehouse, and the warehouse charges are $2000. It can actually be filled with or parked with 1000 motorbikes. Okay. Janita. Okay, I think so. Yeah, you will contact the academy. Yes, you will be given the recorded. Yes. So if someone missed or want to uh, watch the lecture again, yes, you will be given the recording. Yeah. Okay. Okay. So I was talking about warehouse. It is a warehouse. You can actually park 1000 motorbikes, and the cost will be 2000. Now, okay, focus. If the business always have only 600, 500, 400, 300 motorbikes, will they ever need another warehouse? They will never need another warehouse, because this warehouse can actually be we can park 1000 bikes in it. So if the business activity is always 4, 5, 600, the cost will be 2000. So it will always be here, right? Yeah. Okay. But it's going to be a fixed cost. But if in a particular month or some year or month, the business needs to park more motorbikes or have more closing inventory units, more than 1000. So if like the business needs 1200 motorbikes to be, parked in a warehouse, and this warehouse only has 1000, you just keep it away, from your mind that we can just fill it with, no, we can't. We can only park 1000. So for the rest of the 200, we need what? We will need another warehouse. Okay, simple. And let's see that the next warehouse can also fill 1000 units. The cost will be what? 2000. Now the total cost will be what? The total capacity is 2000 and the cost is 4. This is from 1000 to 2000. And if the business ever needs more than 2000 units to be kept in the warehouse, right, they will need a third warehouse. Okay. Another example, orally, quickly. Imagine a business has a supervisor, and the supervisor can manage 15 people. Okay. Supervisor people do what? They manage people. People means labor, right? They supervise the production area. They see what people are doing. They are just walking around. They are just helping people as well. Okay. So one supervisor can handle 15 people. So up to 15 people, we need one supervisor. And let's say the supervisor has a cost of $1000 salary. If the business has only 15 people, up to 15 people, 10, 9, 8, 7, 6, 12, 13, all right, up to 15 people, we need only one supervisor. But if the labor increases more than 15 and the business has decided that if there is more people, all right, more workers, more than 15, we will need a second supervisor for it. We are not going to keep it in supervisor number one, authority. So if there is more than 15 people, even if it's 2, 3, 4, another supervisor is needed. Now, that supervisor will handle 15 people, let's say, and it's a hypothetical figure. All right, that supervisor also handles 15. Business has decided that we are going to give only 15 people under his authority. So that supervisor will handle 15 people. Now, the second supervisor is also handling 15 people, right? So the total is what now? 30. So if it's 16, 17, 18, 19, up to 30 is the second supervisor. So the total cost will be $2,000 because I have imagined the cost of the supervisor as only 1,000. And if the labor force goes beyond 30 people, 31, 32, we'll need a third supervisor. This type of cost is called a step fixed cost. Okay? Did you guys get it? All right. There is last one more. Okay. That will be the last part of the lecture. The fourth cost behavior is called semi-variable cost. It's called the semi-fixed cost. It's also called the mixed cost. This one is easy. Semi-variable cost is that cost which includes both fixed plus variable element in it, which includes fixed plus variable cost. Okay. Graph is, you need to learn the graph. Okay. You will be given the graph and will be asked about it. So it means that on zero activity, there is a fixed cost. Okay, like say for example, $200. This $200 will incur even if there is no activity. If then the activity starts, if the activity starts like production or units or activity, 1 unit, 2 units, then the cost increases by a variable unit. That's why it's called the fixed. This portion of the cost is fixed. This portion of the cost is variable. And this line gives us the total cost, which is the fixed plus variable at any point in time. So at this activity, the total cost will be this yellow, whatever is this. And this will include a fixed proportion of 200 plus a variable. A typical example is what? A typical example is telephone bill. The trademark example, telephone expense or telephone utility bill. Right. Let's imagine that there is a fixed charge in these utility bills. There is a fixed charge. In our countries, at least there is, right? So there is a fixed charge, which is called a standard charge as well, say $200. Okay. And then there is a per call charge as well. And the per call charge is say $5. Okay. This is the situation. So in a particular month, if someone has made 0 calls, what will be the total cost? The fixed cost will be what? 200 for 0 calls. Calls is the activity. For 0 call, the fixed will be what? 200. Variable will be what? 0. So the total cost will be what? 200, because there is a fixed charge. This will be paid regardless of the calls. But if the business made 1 call, then the total bill will be what? 200 is fixed. 1 call is 5 per call. Total bill will be what? 205. So it will be what? It will be here. This is the 200. This is per call, which is $5. So the total bill is what? If 2 calls are made, then what will be the total bill? Someone tell me. What will be the total expense bill? That's great, 210. Why? Because 200 is a fixed charge. And the per call charge is 5. So there is 10, which is 2 times 5. So the total bill will be 210. What? So it's 200 plus the 10, which is 2 times 5, and so on. So the total cost is 215, which is 200 plus 15. 200 plus 15, and then 220, and so on. Right? So this is basically called a mixed or semi-variable cost. It will always include both elements, fixed plus the variable. So cost behavior I introduced in full detail. Those who have missed some things, please revise the lecture. Cost behavior is the way cost changes in response to changes in the activity. We need to know, the managers need to know in order to take reasonable and effective decisions. There are 4 types of cost behavior. There is variable cost. Variable cost is that cost which increases with activity when activity increases and decreases when activity decreases. All right. So it increases and decreases along with activity increase or activity decrease. Fixed cost, and it increases or decreases in the same proportion. Fixed cost is that cost which remains the same for all levels of activity regardless of the activity. Is the same for all levels. Third, step fixed cost is that cost which remains the same, but up to a certain activity, then it increases. Yeah? I gave you the example of a warehouse supervisor. And the last one is semi-variable cost is that cost which has both fixed and variable elements included. All right, this brings us to the end of our today's session. Next time, we'll be discussing more about the cost behavior, and then we are going to be doing practice, around 1 and 1.5 hour practice. So you will be done with chapter number 4, right? So we'll be around dedicating 4 to 4 hours, because in the first 2 hours we do introduction. 1 hour is the cost behavior and classification, 1.5 hours, and next 3 hours are going to be the same chapter with few technicalities as well. All right, some mathematical techniques and practice. Any question, you guys? Right. Did you guys enjoy the lecture? That will be a relief for me. I don't know whether you guys are gonna keep on going. I don't know. My problem is that there should be no one going from the lecture who thinks that no, I didn't understand. Okay, that's interesting. That boring thing that's my biggest problem because accounting, as I said, it's not fairy tale. So this is welcome to the world of accounting. Okay, okay, that's great. Take care a lot. Enjoy your weekend. Watch the recorded lecture again and again. As I said in the start, it's a preparation phase. Collect all the tools and techniques. So hope to see you next week. Hope to see you all next week. All right. Take care a lot. We'll have a WhatsApp group. And if you guys have any question, right? It's not that if we don't have class, so you can't ask question. I encourage you that when we have WhatsApp group, whatever you find in the lecture, in the book, just take a screenshot or just ask in the WhatsApp group. I will be there for you. I will be there for you. That WhatsApp group will be available 24/7. Sometimes I may be sleeping. When I wake up, I will answer, but I will be with you people on that. Okay. So that help will be available all the time for the next 4 months. All right. So take care a lot. See you next time. Take care and bye.